The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Crypto tax software firm TaxBit restocking its war chest with a $130 million Series B funding raise that valued the startup at $1.3 billion. The Seattle-based firm provides reporting software to the IRS and various institutional clients. Joining us now is TaxBit CEO Austin Woodward. Hi there, Austin. Thanks for joining us. So, just off the bat, you've just raised this huge amount of money. What are you going to do with all this funding raise? How are you going to expand?
Yeah, great to be here. Good morning. We're super fortunate where we're at the emergence right now of widespread digital asset adoption. And I say digital assets because we started with cryptocurrency and we're slowly realizing that, or I should say quickly realizing that this is extending to the tokenization of so many different types of asset classes: real estate, commodities, equities, NFTs. I think tokenization is at the forefront of our entire economy. And so tax is at the center of that as far as a huge hurdle from the regulatory standpoint of how can we solve this in a way that's not burdensome on the back end to enterprises, governments, and consumers. And so the funding round is really just revolving around that mission. In order to solve this problem, it does take a war chest and a massive team that this is all we live, do, and breathe every single day is solve the problem of tax and accounting for the digital economy.
Hi, welcome to the show. So there has been a lot of talk about crypto taxes recently, specifically in reference to the infrastructure bill, and crypto advocates have been, freaking out, to put it mildly, about some of the tax language in the bill. I'd be curious about your perspective. How big a deal is this? I mean, what people are claiming is that the way that this is written, it would basically compel various actors in the crypto economy, such as miners, validators, software developers, to comply in a way that is impossible to comply. Like, is that, and thus could eventually force them out of the United States. Is that critique grounded in reality, or is it a bit exaggerated?
Yeah, there's a lot to digest in this bill, for sure. I think, let me speak to it in pieces. First and foremost, this is something that TaxBit anticipated for about 3.5 years now. We built our software around information reporting, where brokers have 1099 obligations and they're helping their users compile their data for their taxes and reporting cost basis and other activities to them where available. And so we're well prepared. We're already doing this. Dozens of financial institutions are using TaxBit to run their 1099 programs right now. So when this bill came out, first reaction was about time. I think this is a net positive thing where the industry can start to have some formal guidance and progress, and it can be viewed as more mainstream. Second reaction, to your point, was surprised at the breadth that this bill covered, where miners, stakers, hardware and software wallet providers definitely was taken back by that, because when you think about that, I'm with you. I do think that would be very difficult to comply with, as these are protocols that are paying these individuals, and it's kind of the backbone of cryptocurrency is miners and verifiers on the blockchain. So I do anticipate that there will be some revisions and potential carve-outs as this thing ultimately goes through the regulatory process and gets finalized. That's my personal hypothesis, and something I believe will happen.
So, Austin, from your perspective, from TaxBit's perspective, is this kind of vagueness, this kind of issue with the infrastructure bill actually good for business or great for business? Are you guys going to be like H&R Block, quietly lobbying Congress members to make the tax code as complicated as possible for crypto, to spur business?
No, absolutely not. For us, I'm a cryptocurrency person at heart. And so I really want to see the industry thrive and progress, and keeping up and coming businesses here on the U.S. shores. And so to the contrary, I think TaxBit has a front row seat, having done this now for several years, to be able to really give the best practitioner level viewpoint in the entire world as related to 1099 reporting. What's possible, what's not. Like, this has been in our wheelhouse and something that we've pioneered, essentially. And so, no, to the contrary, definitely we'll be working with regulators to find a middle ground that makes sense for the entire industry to progress.
Well, I find it interesting that you are working with the IRS as a client, and this infrastructure bill has earmarked about $28 billion in crypto tax revenue. So everyone is wondering, how did they come up with that number?
Yeah, I won't speak for them, but it is very clear that there is an enormous tax gap in America. And the tax gap is defined as the number of known US users that are trading and transacting cryptocurrency compared to those that have filed or reported anything on their taxes. That is massive. Obviously, can't speak into too much detail given we work with the IRS on a day-to-day basis, but that has been proved. And so the only way this same tax gap exists back in the early 2000s in the equity space. When you look at that landscape, this is all not too dissimilar, where 1099 reporting didn't exist in equities on these stock exchanges platforms until the 1099B mandate, and that form was invented in the early 2000s. Prior to that, everything was self-reported. And so for us, it was inevitable that this information reporting landscape was going to follow the footsteps of what happened in the early 2000s, where that tax gap completely closed once the 1099B tax form was introduced. And the IRS is under the opinion that that same thing will happen here in cryptocurrency, where that gap will close therein.
So Austin, but how realistic is it? And where do you see revenues coming in? If you had to guesstimate based on how you guys do your business and what you're seeing, where do you estimate revenues coming from? So is it realistic? And if so, how does it get there?
Yeah, technology, it makes it very realistic, with the exception of what I just talked about, the miners, stakers, hardware, software, wallet providers. Those, I think it's excess burden, and the net benefit therein is just not worth the cost of moving people offshore. But for centralized platforms, even some of the DeFi platforms that are creating peer-to-peer marketplaces, absolutely technology can solve that, and we can connect cost basis across the ecosystem in most cases. And so, yeah.
But specifically, the 28 billion, is that like a pie in the sky number, or is that something you think they could actually get?
I haven't ran the back of the napkin math on that. So I can't opine on the exact number. Offhand, it probably is realistic. It could be low, to be honest.
Wow. So are your thoughts that people are just inadequately reporting their crypto taxes right now?
Yep, absolutely, and that's proven. I think that people are, one, either don't have the tools. The crypto industry really has not done a good job of empowering their users to report natively within their platform. So TaxBit's changing that. We're making it dead simple within the same applications that users use on a day-to-day basis. Two, I think that crypto was founded early on in this, peer-to-peer anonymous concept, and that couldn't be farther from the truth to date, where it isn't anonymous anymore. There is blockchain analytic tools, there are exchanges reporting information, and there's just a sense of financial maturity that's coming to the industry.
So just looking towards the future, the bill is now moving towards the House. Two quick questions. One, do you think that this language is actually going to be changed? Like, do you think we'll successfully get an amendment? And the second is, worst case scenario, if it doesn't and it goes through in its current form, how big a deal is that? Are we really going to see all these crypto-related businesses in the United States?
I am very optimistic that we are going to get an amendment and find some middle ground here in relation to those three use cases that we've talked about many times: miners, stakers, software, hardware, wallet providers. If we weren't, I don't know. I haven't let my mind go down there and kind of hypothesize on what would happen. But yeah, I agree. I think there would be some downstream repercussions.
Hey, so Austin, you're FTX US. They're you guys are partners. Are they clients? How are you guys involved? And what do you do? Do you provide their data to the IRS? How does this work?
Yeah, we're partners, and they're a client of ours, and so we're running, like I said, their 1099 program, and it's not just the 1099 reporting. Where TaxBit really thrives is we've brought a real-time model to the tax space. I like to use the analogy of your doctor. You go into your doctor, you come back home, and a few weeks later you get a bill in the mail, and you had no idea what that doctor visit was going to cost until that envelope is in your hands and you're opening it. Well, I think in large part, tax has followed a similar pattern where at the end of the year, you get your 1099s, you get your W-2s, and you start plugging, chugging into your tax filing software, and you're full of anxiety where it's like, what the hell do I owe? What's my burden going to be? And so TaxBit, we're not just delivering delivering these 1099s on behalf of an exchange's users, we're using our APIs to power in real-time gain and loss reporting straight to users' accounts on the platforms that they use. Well, then that visibility allows people to start making forward-looking decisions. Hey, I should sell this lot as opposed to this lot. I could tax larvest by doing this. And you can control your whole wealth situation therein from the platforms you're using on a day-to-day basis. So you're going to see that rolled out with us and FTX and so many others.
Is this just for is it just for the U.S. or is it for their global operations as well? And are you working with any other exchanges like that?
Yeah, dozens, and you're going to hear lots of announcements over the coming weeks and months leading into the 2021 tax season, with another one actually later this week, a big name that everyone knows. So yeah, excited to share more on that topic. It is just in the U.S. right now. That's one of the reasons we raised so much money, is we're quickly going to the U.K. We'll be there in the coming months, and then other countries to follow.
Austin, I wonder if there are any privacy concerns with all this data being collected and, everyone's information being processed.
Yeah, absolutely. Privacy and security is one of the biggest investments of our business and the forefront of everything we do. I think it is no different from any other industry, whether that be your core fiat bank account, a stock exchange broker. Every single one of those has to do KYC, and they all use, third-party vendors to do their appropriate regulatory filings that are mandated. And so TaxBit's kind of that back-end provider, just like Thomson Reuters or Broadridge is in the traditional fiat space.